What's going on, traders? Hope everybody's having a great day and week. Wanted to do a recap here of the S&P 500, the Spider ETF. Of course, this video is for educational and entertainment purposes only, and in no way should be viewed as financial advice. So with that being said, let's get into some charts here, see where we may want to engage the market, manage our risk, and what to potentially expect coming into the back half of the week. We're just taking a look here from a candlestick perspective on the daily chart, and I normally don't have this on my charts, but I did throw up the 200 simple period moving average here, as we are coming right into this area. It right now currently is sitting at 416.94. We could just call it 417 basically, and we did see a little bit of a bounce today. Unfortunately, the daily candle for the bulls, it did not take out the previous day's body. So we pretty much printed an inside day. Obviously we had a big trend day down on Tuesday, and now just seeing a little bit of a relief bounce here. It is positive that we did close inside of the range from yesterday, so I do think that that is a little bit encouraging. But we did not take out the highs, which is something we were definitely going to be looking for a little bit more of a bullish case coming into the end of the week. But let's see. I also do have the 50 period simple moving average on here right now as well, because a couple of things also taking place from this perspective. I'm not really a EMA crossover type of trader, but it is worth noting. A lot of people do trade those and do look at these type of things. And so we are starting to see the 50 move underneath and start to decline with the 9 and the 20 here. So I would say that that is not a bullish sign overall. Of course, I'm starting to see this crossover and slope down. But we are getting some interesting readings on a few market internals that may suggest some type of a counter trend rally. Now, again, I don't know how high or how sustainable it will be. We can, and we've already kind of discussed this in the weekend videos, we can still come all the way up to attempt to fill this gap up at 435 and still be bearish overall. And even fill the gap, and we still technically would just be putting in a weekly lower high. And of course, we're gonna see how this weekly candle closes out, but we just have to keep that in mind overall. If we do start to see a little bit of a counter trend rally coming into this fresh month of October. But we do have the 200 here. It's a little obvious. And I'm just spitballing here. Wouldn't surprise me. Even if we do get a little bit of a rally, maybe we come and touch the 9. Maybe we open and we actually do flush below the 200. And that's what I'm really looking for. Instead of really trying to tap the bottom, and what I could see really happening is, of course, the market loves to play games, that we may sweep the low of the 200, maybe even close 1 or 2 days below it. And obviously you don't get long there, but we wait for a snap back, recapture the 200, right? They're going to sweep the liquidity. Everybody, if there are longs trapped in here, or if there are longs sitting in this area from the lows on Tuesday, obviously they're using what? They're using the 200 as the stop, right? So what would be the more likely scenario is the market loves to play games. It would be to sweep those lows, take that liquidity, get everybody out. Everybody's upset, they got stopped out. Then we rally up, recapture, and then potentially make that move up higher, maybe into the 430s. Maybe we only retest this declining 20. But as I said before, we could still even potentially fill this gap and still not be completely repaired from a weekly time frame perspective. But ultimately, I am still watching the prior accumulation zone from springtime, which we've already kind of gone over as a potential target we'll be coming back into this area here, and which also lines up in that 410 area here, which is that volume point of control. That wouldn't surprise me. So even if we do rally up and come higher, I still can see this potentially being an area that can get tagged at some point. But let's see, maybe they only sweep us down into, I don't know if we're actually going to hit that 411, 410. Maybe they only sweep us down to 415. It's still going to basically put us into this area of a prior accumulation, and then we've really completed the whole Wyckoff cycle, and we'll see if we start to get a new phase of accumulation down in that area, or like I was mentioning, potentially sweeping that 200, stopping everybody out, recapturing, and then rallying up higher. But let's definitely keep an eye on this prior area of accumulation from springtime that really caused this giant rally during the summer. Yeah, so okay, I don't think there's really anything else I wanted to go over from a candlestick perspective here. Let's see tomorrow if we can start to get over yesterday's highs. Well, we might have a continued kind of chop day as we trade around looking for potential acceptance down in these lower areas. Let's look at the charts now here from a bigger picture Fibonacci perspective before we move on to another chart. And we're watching the 618 here, and there's a couple of different paths, and we talked about in previous plans, we talked about that potential back test of this trend line. Pretty much what we did, fake break over, hit that 50% marker, and then that propelled us down lower, right? And it kind of just gave us that H pattern like so, okay? And if we do get a counter trend rally, and again, I don't know how high it will be, or even if we'll get one, we'll just take that one step at a time. But this 425 is going to be really important. Recapturing that 618 is going to be key for the bulls, and what I'll be really watching, a bit of a proxy coming into the end of the week, is a bit of a pivot. If we are trading back above that 425, then I think it's possible for us to potentially trade. And then, as far as how high we go, and I know I was talking about a gap fill potentially and all those things, like I said, one step at a time, right? So we could also just potentially trade and come on. Okay, there we go. Trade and back test the trend line once again. So come back up into maybe 430, 431.50, retap this previous trend line, and then make our move back down lower to potentially sweep those lows, sweep all those longs right here. We get that fake break of the 200, come deeper into this accumulation, and then maybe, just maybe, recapture that 200. So I don't know, of course, that's going to happen, but we'll see. So this is one potential path that we may see. But we will watch that 425 level. We'll talk about that in our balance zones and from some other perspectives in a moment. But just wanted to map up that idea. If we start really trading back over that 431.50, okay, then we'll look a little bit better in my opinion. Then we'll start talking about potentially coming to the top of the gap up into that 435.75 area, and then potentially up into to fill it right around 438.50, somewhere in that area. But as I was mentioning before, even if we come up, and now again, we already talked about this potential path coming and back testing and rolling over, but we have this path as well coming in here and coming back down. Now, of course, we could come up, come here, and then retest here and come back up. Okay, certainly another scenario as well. So those are three different four different potentialities of where price may deliver. Let's see, if we do recapture that 425, I mean, it is still technically can be a little bit bearish, right? If we're just hanging out down here. So this is still bearish, obviously, but not as bearish if we stay under the 618 and hang out here. Then we're really going to be potentially kind of looking at a another type of bear flag forming, and that will give us potentially that move down a little bit lower into the 415 area, 415.50. So let's watch for that as well. If we do stay under that 425, we'll be looking for that potential bearish consolidation into a bear flag. But we are still watching these oversold readings here on the Momo. We can't stay this oversold as as we've been over 1,000,000 times, but we're still watching that these readings here as they hang out in this potential buy zone. All right, so let's pull up another last daily chart that we have been watching here. A couple of interesting things we want to go over. Of course, this is our bigger picture channel that we have been watching during the last few weeks and the last few videos, I should say. And we have broken, of course, below this trend line, this major trend line, which is not a bullish sign. Today, we simply traded up, came up, and then back tested, right? This channel. And we back tested the bigger picture channel. So we've come back, retested, and I know from that other perspective on the chart I showed you where we could retrace. This also, from a bearish perspective, could be it. If we don't start getting back above in at least, and even here you can see this was a daily fake break above, right? And then failed right back below. We did come up and retest it and then already got rejected. But let's see if we actually get, because this was what? This was 1, 2, 3. Yeah, we never got a weekly close. So let's see. I'm going to pull up the weekly chart here in a moment. To see, because it does show a little bit of a different story on the candlestick chart. But from this daily perspective, I would say it's still bearish. Gotta recapture, gotta hold. We gotta see how the week closes, because from here, we really could just reject and then again talk about that potential sweep of the 200, stop out all the longs that tried to buy the bottom on the 3rd. They got all swept out. Maybe we come a little bit lower. Again, I'm still looking at that volume point of control here in the 411, 410. Maybe we don't get it. But from there, if the 200 just kind of continues in this area, I'm going to try to draw the 200 here. Okay. But then if we come back up and recapture something like this, okay, failed move. What may happen after this failed move? Recapture. We may get a fast move to the upside. Now, certainly, even if we recapture here, we could see this. We come back, retest here, and then we come back down, right? Now we'll have to see what happens if this channel breaks again. Maybe it gets supported again, and then maybe we make another shot for it. Hey, we could just see consolidation in this area for a little bit, and let's take a look at the weekly chart here and just see, because as I was mentioning, it is a very different story, different candle, and this is why it's going to be very important to see how the week closes. Because if we look at the weekly chart, yes, we have a red body candle again, but so far shaping up with a nice wick, failure to push lower, right? We did make a weekly lower low so far from last week, so that is not good. But where are we, or what's going on here? We do have that potential of a type of a hammer kind of right on the line. So if we can close this week back above, I think that would be definitely more constructive. 2 times that they tried to kind of break us below it, and sellers were unable to find acceptance in these lower prices. So if we do recapture back over, I would say that would be pretty constructive, and maybe we get that weekly chance of coming back up into the midpoint of this channel, and that's going to be around 434.50, 435. I mean, we were already talking about that 435 area on the gap. Look at the confluence though that we're going to start to get as if we do start to trade up into this area. It could be setting us up with a nice short mid halfway point of this channel, and the weekly 9 sitting at 435.60, weekly 20 sitting at 434. So if we do get into those areas, could be potential nice trade ideas to the short side for a move back down into potentially retesting this this bigger picture channel. So that will be cool to see how it ends up playing out. And you know, what would that area pretty much give us as well? And we talk about this a lot. You know, I still wonder about a potential of a 50% retracement of the week of the 19th of September, that move. So, you know, maybe that would be right around in this area. So far, they've not even been able to give us really the 25% retracement, right? Which would be a retrace to this much of that move. So we could see, you know, either one of these type of scenarios. So, so the weekly is that candle is very interesting. All right, so before we get into the daily plan for SPY and look at some day trading fibs and our balance zones, let's look at a couple of other charts because I'm pretty much done looking at the bigger picture time frames on the S&P. But let's take a look here around the corner. What do we have? Let's take a look at the VIX. Okay, now everybody's favorite friend. Okay, we're on the weekly. Let's get back to the daily. Tried to get over 20 today. Really had no acceptance over it. A little bit of a spike. You can see here where we've already popped up in this area before and had trouble. Came back down lower here. Obviously, still bullish. The 200 starting to get under the 20 here. Get under the 9. Very interesting. Certainly got that crossover, the 920 and 50 here. We're still above the 15 area, so still elevated. This was pretty much that kind of the top of the summer run and that 1575 area. So still trading above that is all very still bullish for VIX. It seems like a weird thing to say, bullish VIX, right? But interesting moves here, how we really couldn't get a kind of a real true capitulation move for the lows on VIX. But don't be fooled. We could cool off. We could come all the way down to 16. The daily 20. We could come back down to 15. Still bullish, and still the opportunity for us to move up higher, which is obviously what the bears want to see. That being said, we are getting a little spicy here on our Momo, so watching that those potentially overbought readings coming in. Let's look at some other things, products of VIX, see what we can take away from there. VIX futures here. Obviously, a lot of volatility, but we can make a little bit. We didn't really get in backwardation here above the 0 line, still in contango. But you can see kind of this double top here, a little bit of cooling in the futures here. And, this week still could come down a little bit and maybe even come down to this negative 55 area, which still would be bullish. And then we can continue up higher. But as of right now, volatility cooling off in the future just a little bit. And you can also see that here in the 9-day versus the monthly. Just a little bit below 0. Nothing really too crazy, but a little bit of a cool down. And here's the volatility of the volatility, the VVIX. And really what the bears want to see is strong closes or moves over the 105 area, 103. Moves over that, then I think we would be setting up for really a bigger move in the VIX, and we finally might get that blow off for the final move to the downside. But as it stands, if we still are trading under this 103, 105 area, I think that is a little bit of a indication that we could see a little bit of a cool down in the VIX and potentially some short-term relief for equities. All right, so we've gone over the VIX. Let's go over TNX, which has just been on a ripper recently. Putting incredible pressure on the markets. We were watching this channel clear breakout of it here, and I'm gonna have to go back and when's the last time we've been up this high? It has been a while. I'm gonna put in some new levels this weekend to see where we close, but I mean, yeah, I'm gonna really have to zoom back probably like 2008 to find where the heck we are on the chart. But make no mistake about it. As long as we're still holding over 46, I mean, heck, we could trade even down back into 43 and still, or even 44, and still it would just be back in this channel right now. A little blow off toppy here. We could see price cool off a little bit, come into this trend line, back test our previous channel, and then continue higher. Definitely a potentiality right there. We could come back in the channel, trade up, back in, up, down a little bit, and just kind of continue. I mean, like I said, as long as we stay really in this channel, we could potentially, come all the way down here and then just continue our little merry way up, right? So there's really, it's hard to get a bearish case here other than the fact that that we are pretty spicy here on the Momo. We can pull back. Looks like an exhaustive blow off move here, but as I mentioned, we could only come back and retest this trend line and then just keep on chugging. So let's see what happens. Let's see if we get any real structural changes, but nothing really too bearish looking about TNX with this parabolic move. So be careful. All right, let's take a look at the last macro thing. The good old dollar. Still another name just ripping. Okay, I know it's not tradable. Jesus, not like, I don't know why it does that sometimes. Oh God, okay. Here we go. All right, so we were watching, Toss is clearly having some issues here, but we were talking about the 107.30s. Where did we hit? Beautiful, that was the third high, right? Right into our half gap here, showing some cooling off. Straight, the angle of attack, and we've been talking about this, this incline is very, very strong, very, very steep. When is this going to pull back? I like how it was cooling down a little bit. Like I said, we hit this target, starting to come down, but same thing with TNX. There's no reason why we couldn't just trade back into 105 from here, create a new lower lower high, and then just continue on higher. Maybe we come back in, double top, retest, and then finally break. There's another pathway that we could potentially taking on the dollar. So even if we do pull back, that's still a potentiality, and higher dollar obviously puts pressure on equity markets and would point to more downside. So nothing really bearish here, and as long as the 20 holds up, even if we did pull back into this 105 80 area, what do we have right there? The daily 20, boom, right off of that, right? So keep an eye on that. If we do start to sell down and you are a big bear, take a look where SPY is and see if the dollar's into this area, could be another area way to find some confluence that we, that on a counter trend rally, that it might be the time to look at another short, because obviously shorting down by the 200 is not the best idea where we are in the daily. You don't want to be a new short in the hole right now. Got to wait to get yourself a better risk to reward, right? We don't trace moves to the downside or upside. We wait for the retests. All right, so I think that is everything I wanted to go. Oh, okay, a couple more things here. Let's just take a look at our old P-call. We haven't looked at this in a while, and let's see what we can see. Oh God. And let's go to our max here. Got two other things you really want to look at. Oh, what is going on? Okay, maybe that was too much. Let's not do that. Let's do 10 years. Let's see if that... Okay, doesn't like 10 years either. 5 years? Okay, 5 years, it didn't mind. Put to call ratio here, very, very bearish, coming up back over this 1.5 area. Well, usually when we get to these extremes, this could point to a potential local bottom again. Now, like I said, if we get that counter trend rally, like I've been talking about the last couple of videos as a potentiality, it doesn't mean it's a sustainable situation. We don't know how high it's going to go. I'm not talking about that we're going to be ripping to new highs at all, but we'll watch, we'll take all these data points and see and make our best estimation, right? And react to our levels. But needless to say, over this really big level here, getting a bit extreme, every time we've kind of come up into this area or even to the 1.44, we've seen snapbacks in the market. So let's watch as we're getting these extreme bearish readings here on the put to call ratio. People are very over leveraged, and usually that's when the bigger moves in the opposite direction happen. All right, so let's pull back up SPY here. Before we do that, let's just look at two other charts, and this is really kind of the biggest other contrarian indicator now that we are getting into this really, really interesting area here. We're looking at the number of stocks in the S&P that are trading below their 50-period moving average and getting very, very extreme here. Only 10% of the stocks are above the 50-day moving average. And look really what's happened. We don't, and this chart's actually maxed out here for our data. And I just, I wanted to do that because it's how rare we kind of see readings in this type of area. We aren't quite at that 3% yet, but still 10%. I mean, it's very, very, very close. So we could see a little bit, just a little bit more. Again, these are super extreme readings here. And what has happened every time that we have come into these extreme readings? Look at these thrusts. Boom, 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 boom. Now, granted, it's a different environment now from a macro perspective. So am I expecting a rally from here all the way back up to, the highs that we can go? No, I don't really think that that's the most likely scenario. Could it happen? Sure. But could we see something like this come up, back test the 30, and then come back down? Yes, I think that that's possible. Would this push be a nice rally in the markets? Absolutely. So, and this really, I mean, we come up here, what would it be, right? We've got our, if we were just to treat this like a chart, what do we have? We have our high, right? Right, and what would this be? Another higher, lower high overall. So even if we get a rally up into here again, I don't know if we're gonna get all the way up to the 50. Maybe we could. You can see how aggressive these moves. Now obviously that didn't happen in a day, right? But maybe we only hit the 50. Maybe we do actually make the whole move up. I have no idea. But this I think would be the most likely scenario. Second, and this would be the most unlikely. So we'll see what we get. Who knows? Maybe we go to 0. But very, very interesting here. 200 number of stocks here trading underneath the 200, looking interesting as well, coming into this 36 area. Seen multiple times here where markets have reacted out of this zone. Wasn't always a clear path for the 200, obviously a lot slower, but boom, nice move up, boom, counter trend rally, boom, counter trend. Do we get it? Well, I guess time will tell, but these are definitely interesting to look at as far as that kind of contrarian point of view. All right, so I hope that helps, and let's start to look at some day trading levels. We'll be watching towards the end of the week and see what we can take away. Oh, that's not what I wanted to do. Okay, and let's take a look at let's take a look at a 30-minute chart here. Okay, and what were we talking about? Okay, just from the fib perspective, right? Now, I do think it's nice that we did close below, above, what was this, Monday's lows, Tuesday, where we saw this breakdown. We are closing above, right? I think that's constructive. Well, and even though the final print was at 424.66 right here, kind of in Globex futures, well, we're mostly flat. We're only up 2 points, but it is reflecting here on SPY that we're over 425. 425 again, gonna be our real area that I'm gonna watch. I'll take it down from 425 to 424.50. If we can hold these lows, hold here, right? Okay, we'll have a little bit more of a bullish case. We could even trade into 432. 420, 423 area, 422.75. As long as we kind of hold this area as well, I will still maintain a bit of a bullish bias. But if we do break under, then we'll be looking to see if we trade back into Wednesday's lows, into the 420.70s. I think that that's probably where we would be heading. Certainly if we break under the 2 p.m. low here around 422, we'll look for another move down into the 20s. But from these 5-day, 30-minute perspective, we got volume point of control sitting right at 426 basically, and the here on this 30, we do have the 200 period moving average. We start to get up and over that. Okay, I think we can really see some more upside in the markets, and if that is the case, probably would be targeting the top of this volume profile here, which is going to take us into 429.55. So I will watch for that. We could have some issues here at Tuesday's pre-market highs in the 428s, 428.50. So those were also pretty much the highs from Monday's session. So watch for some potential resistance up in that area as well. And if I just throw a level here, you can see it also lines up with this area from Friday. So multiple areas right here where we touched. That's going to be the next level. If we start to get over to that 428, 428.30, we'll look to trade up into the 429.55 area, where we could potentially see some bears come in. So that's all I've got from this perspective. All right, let's close out the video here with some balance zones, and I really appreciate all the subscribers and listeners for joining me on these videos as we try to navigate these markets. If this is your first time, please consider subscribing to the channel. It would mean a ton to me, and if you haven't already, smash that like button. Make sure you've got those notification bells on, so that way you are alerted every time we post new updates about the market. All right, so let's get into the balance areas here, as I was saying, and we'll close it out. Okay, so we already had spoken about this level, right? And really, sure, we said the last stop here was going to be in that 422. From the balance perspective, we're going to want to be holding 422.75, 45 here, anywhere in this area. If we start to break, okay, then we might come into that 422 and come into today's lows, which was basically half gap at 420.75, right? But I really wish this move wasn't happening right now, to be honest, but it looks like we are just creeping up. Hopefully we sell down and then we can come back up. But as it stands, as you can see, it's kind of already happening right now, staying above this 424.40 area, likely to trade up into 420, 425.75, 426. And that is a potential area where, yes, you could look for a potential short trade if we came up, right, came back down, maybe we come back up, retest, maybe we just go straight through. Those are two paths that we could potentially take. But If we do start to break up over here, hang out, this is POC as we already kind of went over at this 426 area. All right, so nice confluence there. Even on that short trade, as we mentioned, back test the POC, can get a short there. But if we're hanging out here, consolidating above POC, market breadth internal is looking good. Okay, we'll look for moves up into that half gap around that 427.50, 427.60 area. Other potential short zones, sure. But if we do get over, look up for that 429, 429.50. That's what I will be watching for on the long side. And as I mentioned, under that 422, under 422.75, again, we'll look to sweep Monday's these lows. If we do start to take that out, then we will look for lower prices, and that's going to bring us down into this 419, 418.60 area down here. But we'd have to get under 420.75. We start to break these, then we'll be targeting right here, this lower part of balance. All right, so that's all I've got for the end of the week. I hope this helps. And again, thank you so much for joining me on these videos. Really means a lot to me. What do you think? Do you think we get a counter trend rally? Higher? Lower? Let's see. Leave your comments below. Would love to hear what you think. Do we head lower first? Do we have a counter trend rally first? I don't know. Who's right? Let's see. All right, guys. Remember, a profitable trader is a prepared trader. So plan your trades, trade your plan. Let's kill it at into the end of the week, and I wish you the best success. So let's get after it, and I'll see you around.